Hello and good afternoon. I'm Holly reporting to you live from 𝐃𝐢𝐬𝐬 studio in Sydney, and it's time for the mid-market pulse. In today's show, we'll be looking at the overall Australian share market performance by the mid-session trade, and then exploring the biggest winners and losers of the day, like Champion Iron, Pilbara Minerals, Fortescue Metals, Endeavour Group, GUD Holdings, and others. Then lastly, in our final segment, we'll be looking at the stocks that have grabbed headlines today, like AusNet Services, Charter Hall Long, Whale REIT, Transurban, and many more. So without further ado, let's get started. Well, the Australian shares have fallen sharply by the afternoon as a fall in commodity prices and weak global cues dampen market sentiment. A slump in iron ore prices dragged the blue chips mining stocks like Fortescue, BHP, Rio Tinto, South32, and Mineral Resources. The persistent worries over corporate tax hikes in the US, as well as concerns about COVID-19 cases and possible shifts in the Federal Reserve's timeline for bond tapering, kept investors on edge. The benchmark index ASX 200 was trading 1.50% lower by lunchtime. The index opened sharply lower today, tracking weak cues from Wall Street, which ended lower on Friday amid tax hike fears. The S&P 500 dropped 0.91%, while the Dow Jones tumbled 0.48%, and the Nasdaq Composite closed 0.91% lower as well. Investors turned caution ahead of the highly anticipated US Federal Reserve's meeting this week, and the central bank officials will announce monetary policy statements on Wednesday, which will give more clarity as to when the central bank will start tapering its $120 billion in monthly bond buying program. The market expects the scaling back of the economy stimulus to begin in November or December this year. And back home on the ASX 200, on the sectoral front, 10 of the 11 sectors were trading in the red zone. The materials sector was the worst performer, with a shocking 3.3% in losses, owing to a sharp fall in iron ore prices. The price of iron ore has halved virtually to $180 a ton on Friday, from $230 per ton in May this year. The price slumped nearly 22% last week as Chinese government curbed steel production to slow its steel-intensive economy. The materials was followed by energy and tech sectors, which dropped over 2% each. And among others, financials, telecom, consumer staples, and AREIT also witnessed a surge in selling activities. Although bucking the trend, the utilities sector was the lone gainer, rising a very solid 2.2% in an otherwise weak broader market. And now, big news coming in from the aviation space, where shares of aviation stocks like Qantas, Regional Express, Air New Zealand, Alliance Aviation Services, and Sydney Airport were in the focus after an injection of a further $184 million into the cash-strapped aviation sector. These airlines are gearing up to resume operations as borders reopen, and the new funding includes $119.6 million to extend by 5 months to the International Aviation Support Program to March of 2022. The extension of this financial aid is a major boost for the ailing aviation industry and would help keep the industry to retain its key skills and capabilities for the long-haul travel in particular, and also supporting the training and maintenance work required to get these aircrafts back into the sky, according to Qantas Airways. Now to the COVID-19 front, where New South Wales reported 935 new locally acquired coronavirus cases and 4 deaths within the past 24 hours. This is the first time in the last 1 month when the state's caseload has fallen below 1,000. Meanwhile, Victoria reported 567 new cases and 1 death today, while Queensland detected 1 case in a hotel quarantine. Now to our next segment, let's have a look at the top gainers and losers by the mid-session trade. Well, the top winner on the ASX pack was iron ore explorer Champion Iron, which tumbled 8.8% by lunchtime. Some of the other notable losers were nickel pig iron ore producer Nickel Mines, lithium miner Pilbara Minerals, and resource company Lynas Rare Earths, as well as blue chip iron ore miner Fortescue Metals Group. On the gaining side, the energy player AusNet Services topped the chart with a 19% gain. Some of the other top performers were alcoholics drink retailer Endeavour Group, waste management firm Cleanaway Waste Management, consumer discretionary business GUD Holdings, and Australian banks Tyro Payments. Now for a small break, but stay tuned on 𝐾𝐢𝐬𝐬 TV as I'll be right back with more trending updates.
Property by 𝐾𝐢𝐬𝐬. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐾𝐢𝐬𝐬 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾𝐢𝐬𝐬.
Hello and welcome back to our mid-market commentary in the Mid-Market Pulse. I'm live from Sydney here at the moment, and let's move on to the stocks that grabbed headlines today. Well, first on our list is Australian energy company AusNet Services. The share price of electricity transmission network operator jumped 20% and hit its 52-week high after receiving a takeover bid from Brookfield Asset Management worth $2.50 a share. The infrastructure affiliate of Brookfield has proposed a non-binding offer to acquire 100% stake in the company, valuing AusNet at $9.6 billion. They'll be reduced to the extent that AusNet pays or declares a dividend to its shareholders prior to the implementation of the proposed transaction. Moving on now to the next update, iron ore explorer Pearl Gull Iron is set to list on its ASX today after raising $4 million by issuing 20 million shares at 20 cents each in its IPO. Based in Perth, the exploration company is targeting a premium iron ore development opportunity on Cockatoo Island, located in the northwest of Western Australia. The listing came at a time when the mining stocks remained under stress due to sharp falls in iron ore prices. And next up, shares of Charter Hall, Long WALE REIT and Charter Hall Group were trading lower on plans to acquire a stake in Ale Property Group. The Charter Hall, Long WALE REIT and Charter Hall Managed Trust on behalf of the Host Plus have agreed to acquire a 50% stake in Ale Property Group, each through a consortium. The deal is expected to close by mid-December this year, and in addition, Charter Hall Long WALE REIT has also acquired 2 industrial properties in Sydney and Brisbane for a total consideration of $67 million. Moving on now, shares of Transurban Group have entered a trading halt pending releasing an announcement related to a fundraiser. The company will raise a $4.2 billion via equity to support the acquisition of WestConnex, the world's leading road infrastructure projects. The road operator company informed its shareholders this morning that the Sydney Transport Partners will acquire an additional 49% stake in rival firm WestConnex. The STP will buy the remaining 49% stake in WestConnex from New South Wales Government for $11.1 billion. The acquisition will take Sydney Transport Partners' total ownership interest in WestConnex to 100%, and Transurban owns 50% of Sydney's Transport Partners alongside its strategically aligned partners. And last but not least, shares of Regional Express gained nearly 1% after the airline made vaccinations mandatory for frontline staff. The rival companies Qantas and Virgin have already made such announcements, and Orex has directed its frontline staff to become fully inoculated against COVID-19 by the 1st of November, adding that 90% of its staff is on track to meet this deadline. Well, with that said, that is a wrap in the Mid-Market Pulse, but keep watching 𝐾𝐢𝐬𝐬 TV for more trending updates from Australia and the global markets.